Hi guys. We're looking back into our last week analysis on Nasdaq. Yeah, we're looking back into analysis on Nasdaq from last week in terms of why is it that we thought the market will continue going further downwards. So what we started on was we started on this price leg here. Then we put our fib all the way to this body of the candle here. Well, I have to say that we're trading ICT, trading strategy. And for now, we mostly look at Nasdaq and nothing else. And we hope that in the future, then we will look at more one more instrument, which would be gold. I think gold entices me, but for now, I still want to work and focus on this instrument before I look into a different one. So ignore all of this that you see here. This is us back testing. We'll look into this into the future. Yeah, when we actually back testing our trading strategy. I'm mostly and only trading ICT, trading strategy and nothing else. I don't look at supply and demand. I don't look at trend lines. I don't look at anything else, and I only trade this. And the only instrument I trade for now, it's Nasdaq. And the next one that we'll be looking at will be gold. And those are the only two instruments that I think when you come on this YouTube channel, you will see us working on. Yeah, I started trading last year, 2021, the 10th of Jan. That's when I began my trading journey, and it's been over a year and a month now. Yeah, to be exact. Being a forex trader, not full time yet, part time, because I still have a 9 to 5, which I hope in the near future I will stop so that I focus solely on this. Yeah, so let's look at the chart and look at the move and why is it that we call the move that we called. So we're looking at a 1 hourly chart. Let's just start high level on a 4 hourly so that we can better understand why is it that we're looking at what we're looking at. So we're looking at this price leg here. We took our fib and we put it there and we marked our discount level of 50%. We put a red line on it, and then we remove the fib and mark the expensive area and the discount area. As you can see here, we have them nicely marked out, and we since had them marked out from last week when we're actually doing this price vector. Now, looking onto this price leg, could see that this is basically a price retracement, or price retracing into 38.2, I think, retracement level of this price leg, and then wanting to continue further downwards. So, but what other confirmations did we have that price actually wanted to go down further? So we had this bearish order block here. We had a market structure shift all the way from here. We had a breaker. We had a fair value gap. Price compressed into it, traded lower, traded back up into that fair value gap and repriced lower, taking out that low. Price came back again, traded into this bearish order block, so to go higher to take out this high, and then it shot further down and give us a compression here, traded into this order block that is here on the 15-minutely, and then a shot further downwards. Now, when you look at this price fractal, you already have a confirmation that price was bearish and it was trying to reach for, you look to your left and you see that it was actually reaching for liquidity resting there and most likely wanting to take out the buyers that went long here and who wanted to hold for all the high highs, the swing traders. But if you look at a daily time frame, you see actually, the picture becomes even much clearer. Let me just take out these colorful things, just hide them a bit. You see what price wants to do here. This bullish order block that price traded into. If I had my highlighter, I would highlight this bullish order block here in the daily, yeah, that one there on a daily, and actually price traded into that bullish order block. The chart is a bit messy, but let's focus on this fractal. So price came into that bullish order block, gave us a little retracement in Yana, and then it formed a low here, retraced into that 38.2 level. When we take this price fractal here, we find that this is the premium level and this is the discount. That's the yeah. So we took this price leg from here to here. See on the daily chart, it's much clearer. Then price retraced here into this order block and then compress down, try to shoot up, fail to take out this high, and then we go then into a lower time frame. So we were here. You see this is a compression and we were here. So then we go on a 4-hourly, and what we see on a 4-hourly then is that same bearish order block that we marked out and you saw it on the daily. Price gave us a repricing higher, traded into this order block, and when you go into an hourly, actually you see that inside this order block there is a price imbalance. There's a price imbalance. That price will need to come back and rebalance in the future, but there's also a fair value gap here. So if we mark out this fair value gap in time, you realize that the market actually came and traded into it. And when it traded into it, what did it give us? Let's go to a lower time frame. When it traded into it, what did it give us? It gave us a breaker. And you know what a breaker is? A breaker is the market tipping its hand for a shift to reprice lower. So we mark out that low. Those are intermediate, those are highs. There's buyers wanting to go long there. What did the market do? Actually just came and activated them and then started trading low. Now when we see this, we wait to see the market trading below this low, and then it traded below that low, and then we want to see the market coming back and trading up into this low, into this breaker block, trading back into this breaker block and breaking further down. What the market did already we have a confirmation of a market structure shift because this low is broken. Then we know that the market is going to trade lower. And you see here that the market gave us a compression. Compression is a low resistance or a low resistance liquidity run. It's also an indication that the market is reaching for a point of reference for it to trade back lower. So we could see that we actually have a bearish order block here that the market traded into. Boom. Then it broke. It traded, repriced lower. Reprice lower. Repricing low. Market structure shift confirmed that we are bearish. Another one here. So here we had a breaker, and then now here we have mitigation. And then the market compressed. The market gave us a moving slowly up, gradually slowly up to a certain reference point, and then once it gets there, then it breaks down, it shoots down. Now we have two levels of confirmation that the market wanted to be bearish. Now we come back here into where our analysis was. So you see here we have a buy side liquidity. Let's put it on an hourly time frame so we can see it, because that's the same time frame we did our analysis on, but we actually also refined it lower. So see the market trading into this breaker, market structure shift, compressed up, failed to take out that high, and then broke further down. And then when the market was trading in this area here, it was expensive. It was in a premium range. So in this area, we look for the market indicators or points of reference that will give us a short position or a short option, because here we're only looking for sells in this price leg. So our price did, when we looked at it, it was here. It's this is Friday, Thursday, Wednesday, Tuesday, Monday, Sunday. Price was here. So what we did on Sunday was we marked out our liquidity points. We wanted to see where order flow was most likely going to go. So we had a buy side liquidity here. We had another buy side liquidity here. We had a buy side liquidity here. We had buy side liquidity here. We had buy side liquidity here. So we had a fair value gap that we marked out last week Sunday here. If I extend this chart, we see that the market compressed up, then shot back, shot straight down, or repriced lower very hard, leaving a price imbalance here. So we were looking to see at what point will price come and close this imbalance, because we have a fair value gap here. So we marked it out in time, and we also saw this bearish order block here, and we wanted to see price either come. We wanted to see price either come and take out these highs. Price was here. We anticipated for price to come in, purge these highs, mitigate, go down, purge these lows, and mitigate out of them, go up, close the fair value gap, and then come back down for this long-term position here, mitigate out of it, or give us a breaker and chase those new higher highs. But in turn, what price actually did was on opening price on Monday, it generated liquidity here and failed to take out that high that we marked out, and that price side liquidity. We actually had a bearish order block here as well that price violated. So actually on Monday it was just ranging, giving us intermediate short-term highs and lows, and it actually came and took out this low. It came and took out this high, came and took out this low, and then went further down to take out this low, then compressed into this bearish order block. We actually had marked out this bearish order block as well, this bullish order block as an area of interest. And we said, should you come up here, then this is an area where you would want to exit. But what the market did was it sold us positions where it could buy them back after it has actually rebalanced this liquidity that's here into this fair value gap. So what the market did actually was it traded into this fair value gap, compressed down, compressed up, shot down, failed to take out this low, compressed up, and then boom, CPI event, and it gave us a market structure shift. Came back up into it, traded into that order block that's there, closed below it, and then came back and traded below this mitigation block here, into this mitigation block, and then boom. So when we actually look into price here, we'll see that maybe we might find something like a fair value gap or a bearish order block in this area that would actually confirm that price is going down. Let's go into a 15-minute time frame. Bam, what we see is that fair value gap. Price actually went and closed this price imbalance that was created by the CPI event, equalized it, traded back into it, came back and traded and closed this fair value gap, went back up into this bearish order block and traded back down. It actually went into this bearish order block as well as this low, which is this mitigation. So you have a mitigation there, you have a mitigation there. Price broke, indicating a shift in market structure, came back and traded into this breakup block, into this mitigation block there, and went further down. But we didn't actually, we anticipated this move to happen somewhere here, but it actually happened later on from Tuesday onwards. Actually, price repricing higher to fill up this imbalance into this fair value gap and close this price imbalance that's here, which is the fair value gap as well, which it did. And the news events actually pushed it. So if you look at price on an hourly, even on the, we'll look at the price fractal of this news event. Basically, there are people, this is a very, high level concept of market maker sell model. So we have buyers coming in here, which is what I also saw, and I think I indicated in my previous video. We have buyers coming in here into this original consolidation, mitigated, went up, short-term high broken, traded into it, then continued up, broke this one, traded into it, and then continued up. So there was buyers that went in here, some went in here, some went in here, some went in there. Now with this market structure shift, the banks were giving us these positions, selling them to us, and we're buying them because they are the guys on the other side. When you buy, when you sell, there's to be someone that buys. When you buy, there's to be someone that sells. So ultimately, their outlook would be to actually take out these guys out of their positions, and actually some of the guys that went in here, and also close this imbalance that's here. So I'm looking to see the market actually come here, purge, short-term high will be broken, traded into, then setting new higher highs. So market structure shift in principle, Michael says, when you actually have a short-term a low or liquidity that's purged by this swing low, then it shoots up and then it takes out a short-term high, wait for confirmation in a form of a order block or a fair value gap for the market to trade back into it, then you take. And if you think about it from a banking perspective, all the money that they took here will be the money that they sell to us to actually reach these liquidity pools that are here, and then they take out the guys that are here and then come back down. So basically my thinking is they would want to reach for the money that's sitting here and use it to give it to us, or sell some of it and close some of the profits and actually reprice higher by selling to us and giving us those positions for us to enter in a form of buys, and then they actually sell it back to us once they've taken these positions out. And they take these ones out, they mitigate them here or somewhere here. They mitigate those positions. They mitigate those positions somewhere here to chase those old highs and form new higher highs, because there's liquidity that's sitting way up there. Once this move is completed, I could be bullish from here all the way to this level here with Nasdaq. But anyway, how did we call our move? With those indications that we're showing you guys here. So normally when you see a market structure shift and you see price trading above an old high and trading back into it, you look for confirmation in the form of a previous high. If you ever look at for the market to close that imbalance and then continue up. So yeah, the other detail that you would have seen in the week, that would have given you confirmations that the market is still going bearish, is they generated liquidity here. And then they came and took out these highs for them to come and take out these lows. And then went back and traded into this fair value gap that's sitting here. Fair value gap. Fair value gap. Traded back into it and then continued down. Took out these lows. With the money that they had here, which they will use after they've reached and compressed. You see, so once they've taken out this position, they started compressing. They started compressing for them to go up and take out the short-term high. Took out the short-term high, traded back into this fair value, and continued up all the way into this bigger fair value gap. And if you look at this, price was really taking its time and moving slow to actually get to this close out of this imbalance. Once it got there, it struggled to trade into this order block or take out that high. What it did was buy and sell positions here were cluttered and they formed an order block. And we have this order block outlined here. And you see price compressing into this bullish order block that's here. So you would take a scalp position here from when the market structure shift is confirmed here. When you go into a lower time frame, you'll see that this is a mitigation. And then once that low is broken, then you take your position once price confirms by trading back into that, and then this will be your AOI. But this is a quick in and out, and then you see price compressing, then you wait for price to reach to this order block, wait for confirmation. This is your first confirmation. The second confirmation is this order block. That price is going to shoot down. The take profit will be here, a scalp. Then you're out, and then you come back in again, and then you wait to see what price does. What price does is it trades again into this order block, and it struggles to move further up. You see, I put this arrow here last week, and what happened? CPI event. Boom, into this first area of interest, initial consolidation. So the buyers that would have gone in here, the way this thing moved, I saw it. It was so rapid that it didn't give these guys a chance to close. Some of them would have closed, but some of the positions would have been taken. The guys that went there were taken out immediately by the CPI event. Price went and equalized as void. You would have seen traded back into that order block. There's a fair value gap here, then came back down, traded into this mitigation block, and then it went down. So this on its own is an indication of a break of structure, a BOS, a market structure shift. Sorry. That on its own, it's a market structure shift, MSS. Once it trades below this, then we expect for it to come back and trade into this, and then we take a short position there. So overall, call this move, the price will go up to fill this fair value, come back down, and I'm still looking to see. I said that price will come, you see, I said TP3 here. That was last week, Sunday, said TP3 here, because I'm still looking at these guys that are coming here. At this point, some of them would actually take some profits here, and the banks are actually buying back their positions here by selling hard, actually chasing these guys. Once they close here, they close in a positive. Once they close here, they close in the money, and they use those positions to actually go and chase this liquidity that's here. So I'm waiting to see Nasdaq maybe being bullish next week, and we'll look at that in the detail when we look at our charts tomorrow, predicting the week of predicting price of the week of the 21st to the 14th to the 18th. But here, this is what we saw. And on occasions, on a Saturday, we'll also be doing some back testing on the ICT strategy. And we'll also be doing weekly predictions on a Sunday. So please make sure to visit our channel where you can get insights on ICT trading strategies and on Nasdaq alone. So that'll be all for tonight, guys. Thank you for watching, and all the best, good luck, and good trading.